All right, so today's video is going to be 8 monthly dividend stocks. Coincidentally, I invest in all these, but I don't really talk about them a whole lot. So today I'm going to go through each one quickly, and if you want to look more into them, you can. I'll leave the list in the description. So right off the bat, we're going to be using Simply Safe to go through these. And again, like I said, it's going to be really quickly, but you should have a general idea about what these companies do and what their numbers look like. So AGNC is first. They do mortgage REITs, and their yield is around 10.95%. They did just do a dividend cut, so their yield's back down to where they like it to be. Still an incredibly high yield. So yeah, basically I bought this company to fuel cash flow for my portfolio, and I'm going to continue investing in it as time goes on here. So this is what their dividends per share looks like. They're not growing by any means, but if they do a turnaround here, obviously it'll turn around in dividends per share. So I'm not really sure what's going to happen with them. Mortgage REITs are kind of an iffier thing, but right off the bat, they do $144 per share, and they're only $13 a share. So it's a really low barrier to entry for those that don't have fractional shares, and their payout is 12 cents per month if you're curious about that. So riskier company, but they do fuel cash flow if that is what you're looking for. So the next one, LTC. This is a healthcare REIT. Basically, they invest in senior housing, nursing facilities, that kind of thing. So 6.34% yield. It's starting to go down as their stock price goes up. Their 5-year average, I think, is around 5%. Yep, 4.91%. So not too bad. Safety score is 52, so they're relatively safe according to Simply Safe. And they have had an uninterrupted dividend growth streak of 17 years. So that's a really good thing to see, especially if you're looking for dividend growth. Obviously, they're growing year after year. Kind of a flat line here. And with the situation going on in the world right now, it'll probably continue for a little bit. But relatively speaking, this company looks pretty good in their history, and their payout is pretty decent at 2.28 per share. 19 cents a month if you are concerned about that. So next one is Main Street Capital. Super safe, 62. Again, dividend yield's pretty high. Basically, what they do is they're a business development company. They're basically middle market lenders, which means they lend or take equity stakes in subprime businesses to generate about a third of the U.S. economy. So BDCs are pretty substantial to the economy if they're 33% of it. So kind of an interesting thing there. But if you want to read more about them, just look them up. Dividend growth is 5% over the past year. Again, dividends per share is heading the right direction, and they have an uninterrupted streak of 12 years without a cut. So really strong company. Once this crisis ends, we may even be looking at an increase from them. They've already come out and said that they are committed to paying their dividend throughout this. So that's always reassuring to people like me that have put money into this company. So yeah, moving on to the next one, Realty Income. This is probably my favorite one in my portfolio. They are called the monthly dividend company. The dividend yield isn't as high as some of the other ones, but again, they're a super safe company. At 70 here, and their yield's pretty good at 5.38. I think when things settle down, their average is around 4.5% here, so not too bad. Price is a little bit higher, around $50. Yeah, $51 right now, but when things were normal before this crash, it was like $70-$80 a share. So now's a really good time to get in for these guys. They're going to keep growing. I mean, year after year, it's pretty consistent here. So I'm really confident in these guys. Uninterrupted streak for 25 plus years. I mean, it's just good. So 23 cents a share there. Yeah, let's move on. So PVA, basically this is the only energy one that I invest in, but the reason why is because they're so safe. I'm kind of bearish on energy overall, especially like oil related ones, just because I think everything's moving more towards non-fossil fuels and that kind of thing. But still got an 80 for a safety score here. And again, their dividend growth is heading in the right direction. So I think these guys will be around for maybe 10, 20, 30 years. And if they're not, I mean, they're still doing good payouts and whatnot. So for at least the short term here, I'm going to invest in them. I mean, this is in Canadian dollars, but as you can see, they've been doing several increases over a short span of time. So for right now, they definitely look like a safe bet. All right, Prospect Capital is the next one. I'm laughing because this one's just one of the shadier ones and I have so much money in them. But right off the bat, their dividend yield is 14.24%, which is super high. Dividend score, obviously unsafe, and their dividend growth. So why did I invest in this? Basically, it's for cash flow purposes, but their share price, $5, okay? Really low barrier to entry. That was one of the biggest reasons why I invested in them, because I didn't have fractional shares yet, so it was easy for me to start building an equity into a company. But right off the bat, they pay 72 cents per share, which is really high. So what does that look like per month? About 6 cents per share. I have 100 shares of them now, so do the math there. Creates a lot of cash flow for a low share price there. But dividend growth, they are kind of trending in a downward pattern. I'm not sure if they're going to turn around or not, but they've had an unsafe safety score for over a year. As far as like the current crisis, I mean, they've been over 100% for earnings per ratio many times and still paid their dividends. So their score is better than AGNC's, but I don't know. It's kind of a speculative stock, so whether or not, I can't even really recommend them, to be honest, with the numbers that they have here. But if you're looking for cash flow right now, then it's a good bet for that, I suppose. So the next one, SPHD. This is actually an ETF, so it's a basket of stocks from the S&P 500. So these ones are considered high dividend, low volatility ETFs. So with that being said, they should be safer companies. As you can see, the yield is currently 5.88%. They don't do a safety score because it's not one company and it's always changing. But they do have dividend growth here. As you can see, it's heading in the right direction. 1.86 per share payout, and right now it's at 16 cents a month. So they have done an increase over the past year, and I think it's going to continue moving that way. Obviously, we have to get through this crisis for those companies to have higher payouts, but overall, relatively a good choice, especially if you're looking for more diversification, which is exactly why I got into them. So last but not least, we got STAG Industrial. So it's another REIT, but this one's in industrial, so it gives me a little bit more diversification. They are growing. They went public in 2003, so it's not super old, but they own 400 industrial properties, which are located across the states, and it's leased over to 350 tenants. So they are pretty large, 3.75 billion, and their annual dividends per share is heading in an upward trending fashion here. Looks like it's flatlining a little bit, but they haven't done a cut in 8 years, which is good to see. Their dividend safety score is 45, which is borderline, which is decent enough for me to not feel like it's a bad choice, but basically it's about average. So if you're looking for an industrial REIT, that one's perfect for you. 5.7% yield. Their average is about 4%. So yeah, not too bad. But yeah, overall, that's 8 companies that you can invest in. I guess it's SPHD isn't technically a company, but you get the picture. So whether or not I would recommend these, it's kind of on you, but I kind of gave a little bit here and there about whether or not I would recommend some of them. Obviously, AGNC and Prospect Capital are the 2 sketchier ones, and PBA and Realty Income are considered the safer ones by Simply Safe here. So that's pretty much it for the monthly dividend stocks that are currently paying. Obviously, there's a lot more out there, but if you guys like these kind of videos, let me know by liking the video and leaving a comment. Thanks for watching.